He said this deal was done on condition that the details within the SEC filing were accurate. He is obviously concerned about the number of bots, and he's questioned what proportion are actually bots. He wants to see less than 5%, and the redhead is Twitter must prove that the spam proportion for the deal to proceed, so that reduced spam proportion. This is the line from Musk. Again, he's saying that this was based, the deal, my offer was based on Twitter's SEC filings before being accurate, and the deal cannot move forward until Twitter proves less than 5% spam. So it seems this deal is going to be held up until he gets more clarity on that particular issue from the executives at Twitter. We'll keep across this story for you, of course. Francine mentioned that this was one area that is glued, or where we are glued in terms of our attention, the Twitter and the tweets from Elon Musk as he negotiates this deal in public.
I wonder whether spam is also unwanted publicity, or is whether just the ugly robots.
Yeah, there's
asking for a friend.
There's a lot of questions he wants answered clearly before he moves this forward. Okay, the planned succession, switching focus to geopolitics, the planned succession, or accession, I should say, of Sweden and Finland to NATO has encountered complications after Turkish President Recep Tayyip Erdogan says he will not allow the Nordic nations to join the alliance due to their stances on Kurdish militants. Meanwhile, Ukraine is calling on European leaders to approve its candidacy status at the EU summit next month. Foreign Minister Dmytro Kuleba spoke exclusively to Bloomberg's Maria Tadeo.
This is really the moment for Europe to take itself to the next level, to launch the reform, to grant Ukraine, to legally anchor Ukraine in the EU integration project by granting the candidacy status.
Okay, joining us now is Bloomberg's Ross Matheson. Ross, this seems to be a major spanner that's been thrown in the works by Turkey. Am I over-egging the pudding somewhat? We heard from the NATO Secretary General, I think in the last few days, saying, look, the Turks will ultimately sign off on this. It doesn't look that way now.
Well, certainly after his comments on Friday, the Turkish president seems to be digging in, as you say, like the view from NATO states is it'll be fine, don't worry. Whereas Turkey is saying, hang on, we're not comfortable with this. The question is, what is his intentions in doing so? Does he really want to hold up these countries joining NATO, or does he want to delay it so he can get some concessions out of the alliance states? Particularly, you know, he's concerned about what he sees as their support by Finland and by Sweden for the Kurdish independence movement. He says they support them diplomatically. He says Sweden supports them militarily. But also, is there something else at stake? Is he really trying to sort of like negotiate other concessions from NATO members as part of this? That could mean it doesn't, you know, that Turkey's not going to block them joining NATO, but they could delay the timeline as a result.
So do we have any idea, Ross, on how much of a delay in time, timeline that could entail? And would he get concessions, because this is too important to ignore?
It could be more than 6 months, which is what we've been looking at so far for the timeline to join NATO, so it could drag out a bit longer. But also, you can imagine there's a lot of conversations going on behind the scenes at the moment. Particularly one to watch is what happens between the US and Turkey, because, of course, the Turkish president wants military equipment from the US. He wants fighter jets, F-35s. He wants updated equipment for his existing fighter jets. Does that get expedited from the US in order to get him over the line? So one thing we'd be very interested to know is, what are the conversations that are happening at the moment between Washington and Ankara on this? That's a key one to watch.
Ross, very quickly, do we know how Vladimir Putin is taking this? So I don't know whether you'd call him, incredibly relaxed compared to some of the noise that we heard a couple of months ago.
Certainly he seems sanguine on the face of it, although he can't be happy about it. That probably just reflects the reality, because it's one thing to sort of object to this happening and then engage in a provocation against Finland and Sweden, but that's engaging in a provocation against NATO, which is something he probably doesn't want to do. So he can't be too vocal about it, because that would force him then to take some action he probably doesn't want to take.
Ross, thank you so much, as always. Ross Matheson there, our Bloomberg executive editor for international government. Now, coming up, with a sunny day ahead for the capital, how bright is the outlook for the UK economy? Doesn't feel very bright. We'll break that down next. This is Bloomberg.
now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open, everyone. 45 minutes into the European trading day, and you can see actually European stocks are elevated, gaining more than they did at the Open, gaining 1.2% higher. A lot of the sell-off that we've seen in technology, for example, this morning coming back up, and that's on encouraging news from lockdowns in China. They could be about to ease in because so far they seem to have worked on.
Yeah, yields up on gilts, and the pound is bid today up about 0.6%. This is after comments from the Bank of England Governor Andrew Bailey. I'm not suggesting that the two are linked. He said an apocalyptic warning is how he described it, Andrew Bailey. He says a surge in food costs could have dire consequences for the global economy.
I'm afraid the one that I am going to sound, I guess, rather apocalyptic about is food. I have to tell you that, I think this is a big concern, because I think two things that the Ukrainian finance minister said. One is Ukraine does have food in store, but it can't get it out at the moment. Two, while he was optimistic about crop planting, but he said at the moment, we have no way of shipping it out.
BOE Governor Andrew Bailey there. Joining us now for more analysis on the UK economy, Sandra Horsfield, UK and global economist at Investec, in the studio with us. Good morning, Sandra. Thanks for joining us. The other thing that Andrew Bailey said yesterday was that the squeeze on household incomes would be more effective, it would at least have more of an impact on pulling down inflation than higher rates. Do you agree with that analysis, and when do we start to see that?
I think that's absolutely true. It's clear we're in the middle of a cost of living crisis. We've seen that mentioned all over the news, and you can see it. Inflation is already high, perhaps tomorrow hitting over 9% already, and we're heading towards close to 10% inflation. This is a real squeeze on incomes. And yes, wages are very strong, and that's a supportive factor, but it's not high enough to keep up with the cost of living pressures we're seeing now.
Sandra, what does it mean for how governments and ministers should react? We've had some incredible interviews. I think one minister went to say, well, maybe you could work harder or find another job. Stuff that you don't believe it if you wouldn't read it in publications that we trust. So what does it mean for what the government should do? What kind of crisis does it mean for the poorer strata of society?
I think we've come into this crisis in a very unusual situation. We've had a lot of government support that has helped through the pandemic to support household incomes and actually keep the labour market very tight. So we're at a very low unemployment rate with the job creation this has brought. We're seeing record vacancies. That's all helpful. At the same time, the very poorest levels of society, the ones who are squeezed on benefits, aren't getting their income uprated with inflation. So at the moment, the broad-based level of support for everybody is a very expensive business. More targeted measures towards the lower income side of things is the most realistic measure to help here.
And we're talking about the labour market, and of course the jobs data came through again, and the broad line was it's still supportive, it's still a tight labour market, as you were saying, but real wages are down. To what extent does that labour market continue to support the consumer going forward? And at what point does the Bank of England need to consider getting to a point on rates where you're actually seeing job losses?
It's a very tight balancing act. You want to have enough labour market slack, if you like, so that the second round effects that the bank is worried about, the part of inflation that they can actually influence, is going to come down, and that's not clear at the current
stage. Do we get that slack this year, do you think?
At the current point in time, there's no sign of it as yet. We have record vacancies. We have indeed more vacancies than people unemployed at the moment. So for the time being, it's a red-hot labour market, and that's what the Bank of England will have to take into account.
Yeah, it feels like there's a huge mismatch. Just on pensions, so I spoke to a pensioner actually who lives in my neighbourhood, and he said, I got a letter from the government saying your pension has been increased 26 pence. An extra 26 pence a week, and he got a letter for that. I mean, stuff that you can't really make up. Sandra, give me a sense of are we going definitely for a stagflationary environment, given all of these unknowns and the fact that it's very difficult for the Bank of England at this point to get this right?
It's not a dead certainty that we'll end up in a stagflationary environment. One key question is, what will households do with the amount of savings they're sitting on? Yeah. We all know that relative to pre-pandemic levels, there was a huge step up in the level of savings during the pandemic. Is this going to be spent to deal with the cost of living crisis, or is this only held by those households who have high savings anyway and don't spend them? That's a big uncertainty. So we could ride through this, but a lot of things have to get right for this to continue.
Sandra, thank you so much. Sandra Horsfield there, UK and global economist at Investec. Now, coming up, Musk talks down Twitter as he floats now the idea of buying the social media company at a lower price than initially offered. He also says the chief executive really needs to prove that there are less than 5% of robot or spam accounts. So we'll have latest, of course, on these morning's tweets. That's coming up next, and this is Bloomberg.
At the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. 53 minutes into the European trading day. Risk on gains of more than 1% across the benchmark. Your future stateside pointing to gains between 0.8 on the S&P E-minis and more than 1%, 1.2% on the Nasdaq futures. When it comes to your currencies, euro is bid, sterling is bid, and there's a significant move out of sovereign debt, particularly at the front end. When it comes to the German bunds, for example, the yields up around 15 basis points. One sector that's near the top of the list, technology, Francie.
Now, Elon Musk, speaking of technology, has floated now the idea of a lower price for Twitter while speaking at a conference in Miami. Now, that was yesterday, and then this morning he tweeted just about 30 minutes ago, this adds to uncertainty surrounding the $44 billion deal. Well, joining us now to make sense of all these tweets, Bloomberg's Laura Wright. Laura, so first of all, there was a number of tweets, a flutter of tweets today talking about the SEC and the fact that actually he really wants the chief executive to prove how many bots there are. And if it's more than 5%, he doesn't think it's worth it, or he wants to renegotiate the price.
Elon Musk has always known that fake accounts on Twitter are likely to be higher than 5%. It's why he said that spam bots are one of the single biggest issues on the platform. And this figure of 5% floated by Twitter has been in the public domain since really 2014, but this is leverage from Elon Musk's team. They want to drive the offer price down. You could argue that that magic number of $54.20 was always a joke. It was a reference to 420. This throws a lot of uncertainty into the deal, with some analysts over at Wedbush stating, look, at this point, Twitter's share price could even fall below $30 a share, given this more uncertainty.
But that's the gambit from Musk. Throughout each earnings quarter, they come out with that below 5%. So what do Twitter have to do now to convince Musk that they've got control of this situation and they can get him back on board for a decent offer?
Well, it's unclear, as was evidenced in this online argument on Twitter yesterday between Musk and Parag Agrawal, when Parag Agrawal stated that, look, externally, it's actually very difficult to verify how many monetizable daily active users there are on the platform, to which Elon Musk responded, well, how on earth can you ascertain value for advertisers? So it seems Elon Musk's team are conducting their own independent process with a sample size of 100 Twitter users. That's what Twitter say they do already, which was why Musk was accused of breaking a non-disclosure agreement over the weekend. But it seems this deal, it's all still to play for, and let's see if it actually happens.
Thank you so much, Laura Wright. I mean, I guess it's fair to want, Twitter to prove the spam proportion for the deal.
It's just looking messy, isn't it, at this point?
Yeah, I just don't understand how you can't actually know how much of your platform are bots and spams, but there you go. It might be the technology. Now, a key interview for you tomorrow, an exclusive conversation with Andrea Orcel, his first since becoming chief executive of UniCredit. So you can't miss that interview. It's a front row interview airing from 5 a.m. UK time on Wednesday on the Bloomberg terminal and then on TV and online.
That is it for the European Market Open. Surveillance early edition is up next. The markets risk on across the benchmark, gains of more than 1%. The S&P E-minis looking at gains of 0.8%. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In the beginning of the war, the perception was that NATO is strong and NATO can act, that NATO can deliver. And the only thing EU can do is to express different levels of concern in public statements.
I'm afraid the one that I am going to sound, I guess, rather apocalyptic about is food.
We would love this to be done in a consensual way with our friends and partners, ironing out the problems, stopping some of these barriers east-west. But to get that done, to have the insurance, we need to proceed with a legislative solution at the same time.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Overdoing a recession risk. Well, JP Morgan's Kalanovic says stock markets are overpricing the chances of a contraction. Global equities gain amid optimism in China. An apocalyptic warning. Well, the BOE Governor Andrew Bailey says a surge in food costs could hold dire consequences. This morning's job data shows a further drop in UK real wages. Plus, talking down Twitter, well, Elon Musk floats a lower offer price for the network, and he continues sparring over spam bots on the social network. Now, quite a lot of stories that we need to get through, but first thing is first, so let's check on the markets. This is the picture overall for the European Stoxx 600. You can see they started on the day higher, some 0.7%. They're accelerating now that momentum, gaining 1.2%. Travel, basic resources. I'm looking at my board. You can do that if you have a Bloomberg on the go. So travel and basic resources leading a broad-based advance of the Stoxx Europe 600. Again, it sets the gauge to be on course for a third day of gains. This has really all to do with China and the fact that economic growth, surging prices, and policy tightening is still hurting, but there's a bit more hope that actually China will not go ahead with its zero COVID policy, and so we could see a bit of easing on some of the supply chains. Now, technology sold off in the last couple of days, now gaining 1.6%. The UK 10-year yield, now this is an interesting one after we heard, of course, from Governor Bailey, bond yields across Europe are jumping. This one, if you look at what's going on with the UK rate, jumping, surging some 10 basis points after data showed a decline in average earnings. And then Bitcoin over 30,000. Nothing to see here. Let's move it on. So let's look at the European map, and then I want to talk to you about Twitter. UK, you can see the FTSE 100 gaining 0.4%. The biggest gains really are the ones that were losing the most yesterday. So you have the FTSE MIB, the DAX and the CAC gaining over 1%. Also, Twitter shares falling 3.2% in U.S. pre-market trading. They're just opening. And it was about 40 minutes ago that Elon Musk started tweeting. He started saying that actually he may even pull away from the deal if the chief executive of Twitter does not prove that there's less than 5% of bots. But we were getting a nice briefing from Laura Wright, and she was saying, look, he always probably knew that the number was at above 5%. So we'll have plenty more on this never dull and never boring boring story. I love the Twitter story as it's this like public fight playing off on Twitter for the control of Twitter. I mean, the irony is not lost on anyone. Twitter down 2.1%. So recession chatter everywhere at the moment. We've heard from JP Morgan strategist Marko Kolanovic saying stock markets are overpricing the chances of a recession. Now, speaking at a summit in Miami, Elon Musk also claimed the U.S. economy is probably in a recession, which he said is likely to last up to 18 months. Now, it's been a subject on the mind of all of our guests here on Bloomberg TV.
We're seeing a lot of headwinds. Well, these really huge headwinds.
Notably lower growth, and we're going to see frustratingly high inflation.
It's a very challenging growth inflation mix.
Stagflation, unfortunately, is the baseline.
Stagflation is toxic for traditional assets.
Is it a soft landing? Is it a recession? Is it stagflation?
It started out as an inflation scare.
Wall Street's biggest concern is inflation.
Then it became a growth scare as well.
There's a lot of conflicting signals.
Whether we get something worse depends on the soft landing debate for the Fed.
The Fed is effectively trying to thread a needle wearing oven mitts blindfolded.
It's a very small needle to thread.
It may end up hiking too much and pushing us into recession.
There's just generally so many headwinds.
Well, we're now joined to talk about the markets by Hannah Smith, the Vice President of State Street's ETF business. Hannah, great to have you on the program. So much going on to talk about. So thank you so much for joining us in the studio. So when you look at some of the concerns out there, what are the markets actually pricing in? Are they all inflation, inflation, inflation? Or is there also worry that we tip this world into a recession?
Yeah, I think when you look at the markets, there has been some signs of capitulation. What we're seeing is indiscriminate selling, or we did see that off the back of Wednesday's inflation numbers coming out of the US. And so we're seeing mixed signals at the moment. Investors are understandably cautious. If I look at the ETF flows that we saw last week, we saw heavy outflows across the board, 4.9 billion out in total. And the only inflows that we did see, interestingly, were in more defensive sectors.
So is it thematic that people are looking for? I mean, there's also this huge discrepancy when you look at equities or ETFs linked to equities and then everything else, you know, bond market, but also FX.
Yeah, it's to be honest, there's not a clear picture right now. As I mentioned, there have been signs of capitulation. So we're seeing some of the equities which have stronger fundamentals selling off and some which are purely defensive. The UK, for an example, it doesn't necessarily have the strongest fundamentals, but we've seen it perform relatively well against other sectors. So it's a mix.
So, Hannah, given the mix and given, again, as you're saying, like all of these concerns and how things are moving quite fast, where do you see the best value going forward?
Yeah, I think what we've been telling investors is to look at relative value. Obviously, the markets have really taken a downturn this year. Also, look at commodities and commodity-related sectors such as energy, which provides some inflation protection, and largely large cap. The US, for example, it has strong earnings. We're likely to see strong earnings resilience in this challenged market. So those are sort of the areas that we would advocate for.
So is it big US corporates also with exposure, still exposure to China? I don't know where China fits into all of this.
Yeah, China's an interesting one. Obviously, the numbers that we saw come out yesterday were very disappointing for the market. I think that it's interesting. If you can withstand the short-term volatility, then it could be an attractive entry point. It depends on investors and their risk appetite, and at the moment, there's risk aversion, so people aren't wanting to have that exposure.
When you look at the UK, so how different is it compared to Europe? I mean, Europe, because of the proximity, of course, to Russia and Ukraine, has a huge energy challenge, and that will mean that the job of the ECB will be that much harder.
Yeah, definitely. Obviously, the UK has its own challenges, it's going through Brexit. I think when we look at the UK from an investor perspective, it's very defensive. So we are seeing investors like UK for those reasons. It has high exposure to consumer staples, for example, healthcare. And these are all sectors which are performing relatively well, or we're seeing flows into as people are looking for quality.
And we'll talk about the UK in a second, but when you look at the, I guess, disbursement of some of the EU funds, are there any countries in Europe that look particularly attractive or less unattractive?
I think it's a difficult one. I think obviously the Russia-Ukraine war is a massive headwind when we're looking at Europe in general, and so I think there is value emerging, but Putin is really holding Europe hostage at the moment. So it's a very tricky area to enter.
Hannah, thank you so much. Hannah Smith there, Vice President of State Street's ETF business, stays with us, and we'll talk a lot more about the UK. Coming up is the Brexit deal in jeopardy, while as the UK raises the stakes in its standoff with the EU. We'll also get the latest on the Northern Ireland Protocol. That's coming up next, and this is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, pre-market, always a good idea to check out Twitter, especially when Mr. Elon Musk has gotten up early or hasn't gone to bed. I really don't know his schedule. And tweeted. He started tweeting about 20 minutes ago. Elon Musk saying he'll proceed with his $44 billion takeover of Twitter only and only if the social media giant can substantiate claims about the proportion of bots on his services. So he tweeted that unless Twitter provides proof of claims that less than 5% of its users are bots, he reiterated his own view that the ratio is far higher. Then he says the deal cannot move forward. So on the back of that, Twitter down some 2.9%. Again, was already falling yesterday on the back of some Elon Musk comments. The flip side is that Tesla, of course, he's a founder of Tesla, is on the up, gaining some 2.6% because there were concerns about how much debt he had to put in place for the financing to make that Twitter deal happen, and it would take away from Tesla. So there you go. Twitter, pre-market, down 2.4, Tesla up 2.6. Now, the UK government is set to set out its plans to unilaterally override the Northern Ireland Protocol, putting the Brexit deal agreed only 2 years ago in jeopardy, raising the risk of a trade war with Brussels. Now, it comes as the Bank of England governor also warns a surge in food costs could have an apocalyptic consequence for the global economy.
I'm afraid the one that I am going to sound, I guess, rather apocalyptic about is food. I have to tell you that, I think this is a big concern because I think two things that the Ukrainian finance minister said. One is Ukraine does have food in store, but it can't get it out at the moment. Two, while he was optimistic about crop planting, but he said at the moment, we have no way of shipping it out.
Well, now for more, we're joined by Bloomberg Opinion's Torres Rafael. So, Torres, there's a million things going on. First of all, you're going to see a huge cost of living crisis in the UK because of this high inflation. But then there's also this, added uncertainty with the Northern Ireland Protocol. Like, where are we?
Well, the Northern Ireland Protocol, so the very starting point here is that it's a trade barrier. So some of the goods that are transiting from Great Britain to Northern Ireland are getting checks. There are customs barriers, there are rules of origins checks, and all of that means costs. Now, in terms of the impact of the protocol on Northern Ireland's economy, some economists estimate that it's added about 6% of costs. Some say that it will bring Northern Ireland's economy about 2.5% below the level of growth it might have already had, which is less than the growth sacrifice that the UK's economy as a whole is projected to have. But the government is trying to thread a very small hole at the top of a needle here, if we could say. It has to balance the interests of the DUP, the Democratic Unionist Party, which is refusing to participate in power sharing in Stormont unless the protocol is overhauled. It sees this as an existential issue in terms of keeping the union together. It's to balance the interests of the EU, which doesn't want to rewrite the protocol, says this is what Boris Johnson signed, he has to live with it. It has to balance the interests of the White House, which is very worried about instability in Northern Ireland. It has to balance the interests of the cabinet, which is divided over it. And, let's throw in the Irish government as well, which is worried about access and the integrity of the single market.
Yeah, Andrea, so sterling at the moment is at 124.49. I mean, why does the UK think they can renegotiate with the EU when the EU has said, no, this is what you've signed? Is it political capital because he was, such a support in trying to freeze out Russia in support of Ukraine?
Well, I mean, the cynical sort of answer is that a fight with the EU is a nice distraction for a lot of domestic problems, from Partygate to cost of living to the apocalyptic food situation that Bailey referred to. I think a more nuanced answer is that the UK government, its ideological allies, I think in Northern Ireland, the Unionists, do see a real problem with the protocol. They don't think it's working. They think it's a recipe for instability in Northern Ireland, and they think the EU can give a little more. And they've put together proposals, which we're going to hear in legislation, which reverses some of the burden of proof of showing that the goods that are transiting are in compliance with EU rules. It would enhance a trusted trader scheme. So the UK thinks it can get a little more. The DUP is not going to rejoin the Assembly until it gets more. And so Boris Johnson is trying, both with more conciliatory tones, but with the stick of unilateral legislation to try to thread that needle.
So we'll see if something happens to change it. Torres, thank you so much. Bloomberg Opinions. Torres Raphael there with the very latest on Brexit negotiations, really. Now, Hannah Smith, Vice President of State Street's ETF business, is still with us. Hannah, I mean, this seems like a nightmare just in terms of the Bank of England dealing with the economy. So we have Brexit, which could couple, I guess, or certainly amplify some of the inflationary pressures that we've had. The cost of living crisis is real, and it's worse than in other countries.
Yeah, no, absolutely. I think the UK, obviously, as Theresa mentioned, there are issues. There are issues there at the moment, and what we're actually seeing is the market isn't necessarily picking up on that. The flows that we've seen into the UK have been strong, and the performance has been strong as well. So I think it's, as I mentioned earlier, this flight to defensives that's kind of dominating the story.
So what happens in the UK? Like, how do you see? Is there a policy mistake coming from the Bank of England because they really need to choose between inflation and growth, or are we just? Is it almost a given that we'll see stagflation?
I think it's very difficult. The governors are obviously in a very difficult situation where they have to balance this inflation and what we're seeing is slow growth as well. So I think there's definitely going to be some reaction, whether that's going to be a recession, who knows? But I think there is going to be there is likely going to be an impact on the UK economy.
One thing, Hannah, that we've been trying to figure out is the UK almost a microcosm of what could go bad in the world, just because of this, very tight labor market. It feels like all the concerns that we're talking about for the Fed, the ECB, kind of really come to the forefront here because it's a small, open economy.
Yeah, definitely. I think that when we look at the UK, like you mentioned, it does reflect some of the issues going on. A lot of the central banks have the same challenge at the moment. They're trying to tackle high inflation. At the same time, there's low growth, falling growth. So I think that it is essentially, what we see in the UK could well be an indication for what we're going to see globally as well.
What kind of inflows are you looking at ETF in the UK? Are they different to elsewhere in the world?
The inflows have been relatively strong into the UK. So we've seen about 1.6 billion year to date into the UK. To put that into context, we've seen about 62 billion inflows into the European landscape. So that encompasses equities and commodities as well. But given the outflows that we've seen in some of the other regions and asset classes, it's still relatively strong.
And are you expecting that to change? I know the ETF world is such a fascination because it's a wonderful, wonderful way to play some of these things. And I guess it's growing almost every year.
Yeah, absolutely. I think the thing about ETFs is obviously there's so much liquidity within the ETF, so you often see the movements within the ETF before you see it within the wider market. So I think given some of the concerns that you've mentioned within the UK, I do wonder whether we will start to see a turn in that tide in terms of the inflows that we've seen and the strength.
Hannah, thank you so much. Hannah Smith there, Vice President of State Street's ETF business. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine, and thank you. Shanghai is starting to unravel the punishing lockdown that's confined millions of people to their homes for more than 6 weeks. That's after the financial hub reported no new COVID infections in the broader community for a third consecutive day. The city reported 823 infections yesterday, down by more than 100 on Sunday's total. Now, Emmanuel Macron has named former Labour Minister Elizabeth Borne as France's new Prime Minister. The 61-year-old, once close to the Socialist Party, takes over from Jean Castex. Borne has also served as Transport Minister and Ecology Minister. The appointment comes less than 4 weeks ahead of key elections to France's Parliament. New York City is urging residents and visitors to wear masks indoors as COVID infections levels do rise again. The mayor, Eric Adams, says the city is preparing to potentially enter a higher alert level in the coming days, but is not yet at the point of reintroducing a mask mandate. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, coming up, talking down Twitter, Elon Musk floats a lower offer price for the social network and continues sparring over spam bots on the social network. That story is up next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacroix here in London. Now, Elon Musk has floated the idea of a lower price for Twitter while speaking at a conference in Miami. This adds to uncertainty surrounding the $44 billion deal. And then in the last hour, Musk said he'll proceed with his takeover of the social media giant only if he can substantiate claims about the proportion of bots on its services. Now, for more on all of this is Matt Bloxham from Bloomberg Intelligence. Matt, you and I never bored because, I mean, he's a prolific tweeter. Yep. He's like doing business by tweet. I mean, it's absolutely incredible the amount of information. He's also talking about the SEC. So did he really believe that there were like less than 5% of bots on Twitter when he made the offer?
Maybe, probably not. Who knows? But I think there's a lot of things going on here. Clearly, the market's gone down a lot since he made that bid. Yeah. He's perhaps looking for reasons to either kind of renegotiate the deal or kind of step away from it without having to pay this $1 billion termination fee. Yeah. So difficult to know, as always, what's going on in his mind.
So has he had a change of hearts, or is it a downturn in technology stocks? Is it impossible to read?
Yeah, I think it's impossible to read. I mean, like I said, I think he's always had an issue about bots and fake accounts with Twitter. So I would imagine probably in his head he thought it was always more than 5%. So I think he's now just kind of looking for a way to kind of really push them and negotiate a better deal, I think.
So what do you think happens next?
Good question. I think probably he's going to wait to see whether either publicly or privately Twitter provide more information about how they get to this 5% calculation. I would think they're better off doing that privately. And on that evidence, he'll decide whether to take forward the deal or not. I think it's very unlikely that at the original $54.20 price, if he comes back with a revised offer, it's going to be substantially lower, I think.
I mean, privately, is there anything that's private? I can't imagine the stress
not really,
of dealing.
Yeah,
I've tried to negotiate with Elon Musk, which has such a high-profile account and just tweets all the time.
Yeah, and as I was saying, before we came on live, I think if I was the CEO of Twitter, I'd just be keeping as quiet as I possibly could.
I mean, you could say that Elon Musk is 100% owning this, right? There's not much that the Twitter side can do.
No, not really. And I think that the more they talk publicly, perhaps the more they tie themselves up in knots. So keeping quiet, I think, would be the better option for me if I was Twitter.
Well, I'm hooked on the tweets. Matt Boxham, thank you so much. Matt Boxham there with the very latest on Twitter. Coming up, wheat prices keep climbing on worsening crops and Indian export curbs. We'll be joined by Bank of America's Kay Hope to discuss food inflation and the markets. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
what's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Overdoing recession risk, JP Morgan's Kalanovic says stock markets are overpricing the chances of a contraction. Global equities gain amid optimism in China. An apocalyptic warning. The BOE governor, Andrew Bailey, says a surge in food costs could hold dire consequences. This morning's jobs data shows a further drop in UK real wages. Plus, talking down Twitter, Elon Musk floats a lower offer price for the social network and continues sparring over spam bots on the social network. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So global food costs are poised to climb even further on soaring wheat prices after India curbed exports. Droughts, floods, and heat waves are threatening production worldwide, just as Russia's war in Ukraine throttles supply from one of the largest growers. Now, with lower-income countries being hit the hardest, Bank of America sees the impact reflected on emerging market sovereign spreads and inflation. Well, we're now joined by Kay Hope, credit research analyst at Bank of America. Kay, thank you so much for joining us. It does seem, when you look at wheat futures, now dropping actually by as much as 3.8% Chicago, it's probably an effect of just why they've been rising up so much. Like, where do we end up? How much of, are we looking at famine? Like, how much higher can these wheat prices go?
Wheat prices can go higher, and that's the expectation. It does take time for some of these moves to be reflected in actual markets. But the concern is that when you have 26 countries around the world who get more than 50% each of their wheat supplies from Russia and Ukraine, those countries are going to have to go somewhere else to meet that need, and that can continue to push things up.
So what does that mean in terms of, I mean, can we talk about supply chains, even if it comes to like food and agriculture? Are we going to be planting more of these crops, or how will it change the way we buy things?
There are some changes in what's being planted, and we are seeing some substitution already in grocery stores. Certain types of vegetable oil are being substituted for others, and that's something that we can continue to see. Ukrainian farmers are starting to report what they're planting this year, and some of them are planting more oils, seeing that need coming through. But what we're hearing from the Ukrainians is that they're planting about, at this point, they've planted about 80% of what they had planted last year. The sowing campaign is ongoing, and so at this point, they're only at 50% of the total that was planted last year. So that is ongoing, yeah. But Ukrainian farmers do face issues like fuel, equipment, and personnel to take them through the summer.
And transport, right, in and out of the country.
The transport links are major. So most agricultural products are transported through the ports that are now closed. Ukrainian officials are asking the EU and other countries to please make it easier for trucks to pass, for lorries to get through, and to look at rail. But these are all things that take a little bit of time.
Okay, talk to me, I mean, in your notes, and this is incredible, it is hard to believe that over 2 billion people face regular food security issues when we talk about driverless cars. And that really hit it home. When you write that and you hear that, is there anything that governments can do to try and alleviate some of this?
There are a lot of things that governments are working on, and the UN has a food and agriculture report they write every year that has some terrific recommendations in it. What's interesting to me is that a third of the food produced globally every year is wasted. And so one thing governments are working on doing is reducing that food waste. And in developing markets in particular, that waste happens at the start of the chain. Yeah. So it happens at the point of production and moving that food to market. Where in developed markets like the UK, a lot of that waste occurs at the household level.
That's really interesting. So does that mean that there's something that big agricultural businesses can do to actually try and reduce that waste?
At the beginning of the chain, there are things that big agricultural companies can do simply by getting involved. given that most global agriculture is small farms, that's a little bit more difficult than it might sound at the outset. But what we can do at the end of the chain in places like the UK in reducing waste at the consumer level, a lot of people are already talking about, using everything that you buy, grocery stores that are now selling imperfect foods, things that are a little less than perfect. They're talking with the government about making that sort of a program a little bit broader, reducing some of those regulations that mean you can sell an apple that's a little too big or a carrot that's a little bit bent over.
So, Kate, talk to me about what this means actually for your space, which is the credit space. Does it change, the viability of credit space, for example, for big companies or also countries?
It's both. And we're seeing some of the food issues coming through in the emerging market spreads that you already mentioned. At the corporate credit level, we're already our credit analysts are talking to their companies about who relies on food inputs for their products. Beer companies who use barley and hops. Grocery stores, retail who are just starting to recover from the COVID pandemic. What's going to happen to those as people have to shift their spending patterns? Where will people look to spend or not spend? And what happens to margins as we go forward?
Is there any country also that, when it comes to sovereign credit, I'm thinking of Egypt, just because so much of the consumption there, for example, for some of the, the bread that's made, is in some of those countries. So does it have an immediate effect, actually, on sovereign credit
Egypt
rating?
and Tunisia are two of the big ones, absolutely. I believe there were headlines yesterday that Egypt has already concluded an agreement with India to try to find an exemption to some of the rules that India put in place earlier this week. And so I do expect us to see, we talk about COP26 and upcoming COP27, environmental issues meeting social issues. That's part of what this has to be.
Okay, this is a dumb question maybe, but I'm going to ask it anyway. Can you switch from wheat flour to rice flour, or is that something that takes time because of tastes and also the supply chain?
For that particular example, I'm probably not your best expert, but there are examples of where things can be done. Corn flour, switching certain biofuels, going from biofuels to using that corn again to produce food. I think something like 40% of the corn produced in the U.S. is used for biofuels.
That's incredible, isn't it?
There are ways to find the food that's needed and get that to populations.
Kay, thank you so much for joining us. Kay Hope there, credit research analyst at Bank of America. Now, coming up, a key interview for you tomorrow, an exclusive conversation with Andrea Orcel, his first since becoming chief executive of UniCredit. So don't miss that front row airing from 5 a.m. UK time Wednesday on the Bloomberg terminal and then on TV and online. But coming up, as the UK's cost of living squeeze intensifies, we'll be joined by Rishi Khosla, co-founder of the digital SME lender Oak North. We'll discuss how inflationary pressures are impacting the bank's UK business customer base. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Elon Musk says he will proceed with his $44 billion takeover of Twitter, only if the social media giant can prove claims about the number of bots on its service. The billionaire tweeted this deal cannot move forward unless Twitter provides proof of claims that less than 5% of its users are bots. His view is that that ratio is far higher. Now, Warren Buffett's Berkshire Hathaway has said goodbye to one long-time bank stake and made a big bet on another. A filing shows that Buffett ended his long-running investment in Wells Fargo in the first quarter. It was once Berkshire's biggest stock bet. According to the filing, Berkshire has now invested almost $3 billion in Citigroup. Microsoft is planning to nearly double its budget for employee salary increases as it seeks to retain staff in a hot labor market. The US software giant's pay hike will mainly affect early to mid-career employees. The CEO says the company's talent is now in high demand. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, Oak North, the digital-only challenger bank backed by SoftBank, specializes in providing business and property loans to SMEs. Since gaining its banking license back in 2015, Oak North has lent over £7 billion to SMEs across the UK. The bank's co-founder, Rishi Khosla, joins us, and he says he's eyeing a potential IPO and working to inspire the next generation of entrepreneurs. And Rishi joins us now. Thank you so much for joining us. I have a million questions on IPOs, but first of all, you really provide a real-world glimpse into what's happening in the UK economy. What are you seeing? Are people worried about the cost of living? Are they worried about inflation?
So the vantage point we have is very interesting. Obviously, supporting SMEs up and down the UK, we have, like you say, a front seat in terms of actually what's happening in sort of the high street as such. And when you look at that, you've already had situations where consumer confidence has peeled back and discretionary spend budgets have already started to be reined down in things like full-service restaurants, for example, in terms of leisure hotels. So you're seeing an impact there. But at the same time, you're seeing a stratification because, for example, London hotels are still doing extremely well. So the cost of living crisis, I think, is actually causing people to step back, actually run calculations on affordability and determine what purchasing behavior they want to go ahead with on the basis of that.
I was reading the story today, actually. There's 10,000 hotel rooms that have been added since the pandemic in London, and 50% of that was high-end. So what are the kind of struggles that the entrepreneurs that you speak to are facing? Is it finding the right talent, or is it paying them enough?
So right now, I mean, inflation on all sorts of input costs, including wage inflation, is off the charts, right? And for businesses, especially when you're playing to a discretionary spend pot, your price elasticity in terms of being able to increase your price to your customers isn't that strong. So you play that out. Absolutely, being able to pay them enough and actually hold on to talent, find the right talent and pay them up is a big challenge in terms of sort of margin compression and actually just being able to service well. Outside of that, I think, again, the strongest entrepreneurs always find opportunities in times like this. So we are seeing opportunities with entrepreneurs actually taking relatively bold steps to be able to actually gain further growth and sort of competitiveness in their businesses.
So what kind of questions do you get in terms of some of the loans that they need? Is there a step that's, in the funding process that they need more support than in other steps? Is there a pattern to this?
Yeah, I mean, look, for us, we established ourselves to help British companies scale up, right? Yeah. So we term it's the missing middle. Yeah. So these are businesses which are already evolved to a certain level, and they're looking to take that next stage up of of growth. And that's...
Do they? I feel like the US is so much better at scaling up.
You know what? The US is better, and we're trying to make the UK better. So that's why, that's our whole mission, that's our whole reason for being. And beyond that, I mean, we try to do our bit as well to actually increase the appetite for entrepreneurship within the country as well, at a much younger level. So in a way, we're creating the future entrepreneurs to make sure that actually the UK becomes this massive innovation entrepreneurial economy, which arguably once was.
So what needs to change for that to happen? Is scale, I mean, scale feels like it's so important because if you're just starting out and you dominate the market, then people notice you, which is why Silicon Valley is so good at this.
I totally agree. Scale is so important, and like you just alluded to, the fact that many UK companies grow to a certain level and then exit and sell out and sort of check out. It's sort of taking that to scale where you get that global recognition. That global recognition continues to attract the best talent to the UK. That attracts further investment dollars. That whole cycle sort of evolves. And clearly there's some areas like in the fintech space, in biotech, life sciences, where the UK has actually built that type of ecosystem, but I would still argue that growth element is still missing. The early stage startup element is very, very fertile in the UK.
Rishi, IPO, when is it happening? Give me an exact date.
My answer is maybe it'll happen at some point in the future.
What, nothing more? Would you like
more.
that, or would it put too much pressure?
Again, for us, my co-founder and myself, Joel, we're in this to build this business and really play to our mission for a very long-term period. So actually an IPO for us isn't actually, an end goal as such.
Working from home, so we're asking this to every bank. What does it mean for your company? Is it working? I mean, you're digital only, so presumably it's working.
So look, we're digital only in terms of as a business, but ultimately, we are big believers in the value of coming together, collaborating, innovating, and actually moving the ball forward. So at the moment, we've got a hybrid model to work, and I think that's where we'll end up sort of leveling, but actually bringing everyone together and being in offices is critically important, like your great offices here at Bloomberg.
Yeah, I mean, we're fully functional.
There you go.
When you look at some of the default levels, and again, we heard from the governor of the Bank of England yesterday saying, look, the rise in prices, especially inflation, food inflation, could be apocalyptic. What does it mean for some of the defaults and some of the loans? Have you modeled this?
Yeah, so I mean, we have a product called the Oak North Credit Intelligence Platform, which we actually license to other banks as well. But what we do within that is actually create forward-look views based on 273 subsectors across the economy. And by doing that, like we were modeling COVID in January 2020. Yeah. We've been modeling inflation, supply chain issues, energy prices, all of 21. So we're doing that. We're continually stress testing what that actually looks like across our loan book, and therefore managing against that, and actually critically helping our borrowers make sure they make the right decisions today to avoid them getting into issues tomorrow.
But is this a real problem, or is the cost of living?
It's a massive problem.
But so how many defaults could we see? I don't know if we talk about zombie companies, but we're just getting out of COVID.
Right.
And now we're seeing,
I mean, if you just look at insolvencies in the UK, they've sprung up, right? Yeah. So if you look at defaults, I mean, across the banking sector, I mean, the probability is we're going to go into a real credit cycle.
All right, Rishi, thank you so much. Don't be a stranger. I want to know about the IPO.
Thank you.
But also a lot more about UK entrepreneurship. Rishi Khosla there, a co-founder of Oak North. Now let's get back to one of our top stories. Ukraine calling on European leaders to approve candidacy status at the EU summit next month after Germany last week dampened hopes for a quick accession. Now the foreign minister, Dimitri Kuleba, who's in Brussels to meet his counterparts, spoke exclusively to our Maria Tadeo.
The point here is that in the last 2 months, we've been hearing from all across Europe, Ukraine, we admire you. Ukraine, you inspire us. Ukraine, you belong to our family. Now it's high time to make the next move and legal this political recognition in words into the legal and political recognition in facts.
Which is a membership of the European Union.
It's the candidacy status. It's the EU candidate status for Ukraine.
When do you want it?
To be granted at the EU summit in late June. This is the moment, this is the point.
We're talking weeks from now, essentially.
Yes, essentially, yes. But as I told you, we are on a very good track with the European Union. We are fighting the war, this is true, but we are also have the best relationship with the European Union ever, on all accounts. We are part of one. Ukraine, the post-war Ukraine, will make the European Union stronger.
You're a diplomat, so maybe this is not the most diplomatic question, but of course you make it clear you want to join the EU. It's your aspiration. When you look at right now a country like Hungary that is a member of the EU, don't you sometimes go, maybe that's unfair, that we're out and they're in?
Well, if I was eating popcorn in front of and watching the news, perhaps I could allow myself to think this way. But I believe that the current state of affairs in the European Union sends a very simple message. Nothing is set in stone. Every day you have to fight for freedom, for democracy, for peace, for respect for human rights, for prosperity. This is a daily fact. Once some countries who did not meet entry criteria at the moment they were allowed in became members of the European Union because there was a clear political will to make them members because they are one of us. All European integration is based on one question. Is he or she one of us? If the answer is positive, everything else is about technicalities.
The Ukrainian Foreign Minister Dmitry Kuleba there speaking exclusively to our Maria Tadeo. Coming up, it's been a tough quarter for hedge funds. In a moment, we'll dive into the findings of our analysis of the latest U.S. regulatory filings. That's coming up next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space. Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, let's check on UK assets because there's quite a lot going on with UK news. Now, we also have, I have to say, our Ven Ram, our cross-asset strategist, is writing on the Markets blog. He is on fire. Go and check it out on MLive. He's saying the pound is surging to the top of the leaderboard after those stellar job numbers out of the UK. He believes the gains look suspect, and gilts he also believes are too rich for comfort because of a tight labor market. That would keep the BOE going. It's all about the cost of living and, of course, the squeeze on UK living standards intensifying in March. You can see the FTSE gaining a touch, and when it looks at sterling, it's 124.70. So it was also a dismal first quarter for the so-called Tiger Cubs, according to the latest U.S. hedge fund filings. Now, among the top losers was Tiger Global's management's flagship fund, which fell by, listen to this, 44%. Among the stocks that hedge funds sold down were pandemic favorites such as DoorDash, Netflix, and Zoom. Well, Bloomberg's Charlie Wells is here to dig into the filings. Charlie, just a piece of news. A lot of people will want to know this. Here in the UK, McDonald's is launching on Deliveroo in the UK. I know we're talking about DoorDash and all of that. I feel like a lot of people will be happy that McDonald's is on Deliveroo. So the question of the quarter, I mean, what's going on with tech?
Yeah, so tech is kind of coming out of that height of the pandemic era, right? So a lot of these companies that really thrived in those darkest days of lockdowns, Netflix down 70% or so, DoorDash, an American version of Deliveroo in some senses, which I don't know if it has McDonald's on it or not, that's down about 55%. And what you saw was a lot of these hedge funds, particularly these equity hedge funds, pull out of some of these favorites, Tiger Global in particular, liquidating its position in Netflix entirely.
How could they get it so wrong? And actually, what are they putting the money into?
Yeah, I think it's really difficult. I think, there are ebbs and flows in behavior as the pandemic ebbs and flows as well. It's really difficult to predict. We've seen some of the difficulty in companies like Carvana. So that's an American used car marketplace. We saw D1 Capital back out of there, but we saw Tiger put more in. We saw a Maverick also invest there. So it just shows the difficulty of finding winners. It almost seemed like in the equity markets over this past quarter, there's nowhere to go.
So does it reshape actually the markets? I mean, I know it's hedge funds, but actually changes everything.
Yeah, so this is crucial for the hedge fund industry, And what we've seen really is these equity strategy funds struggle. And it's been a particularly striking turnaround because they were doing so well, right? Early in the pandemic, Tiger Global in 2020, it was up 50%. Look at the first quarter, down about 34%. So that is a striking change. You see, a little bit more success in other sorts of hedge funds, right? So macro funds like Bridgewater, up about 16% in that first quarter. If you've got multi-strategy, they were up about 6% at D.E. Shaw. So what this really highlights is the importance of risk mitigation at these funds, because hedge funds, it's not all about getting the returns, right? Clients are also trying to pay for some of that risk mitigation, and they're asking.
And it's not working.
Yes, it's not working, particularly at these equity funds.
All right, Charlie, at least we can get, on Deliveroo, McDonald's.
Yes.
I don't have you down as a McDonald's kind of guy. Am I wrong?
I love chicken nuggets. I'm not going to lie about that.
Charlie, we find out something new about Charlie Wells every day. Thank you so much for joining us. The Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Katie Lines in New York, or Anna Edwards here in London, and this is Bloomberg.